Good afternoon, and thank you for joining us today. My name is Brian Stein, and I am with Pervasive Path Consulting, a boutique strategy and technology consulting firm focused on helping our clients make the most of mobile technology. We are pleased to be joined today by Ido Ophir, VP of Products from Personetics, a partner of ours who offers a predictive virtual assistant solution built specifically for the banking industry. I'm looking forward to sharing with you more about the Personetics solution as well as other techniques for creating a competitive advantage in banking through the use of mobile differentiators which can help engage and service your customers. In order to provide context for our point of view in this webinar, I think it's important to briefly highlight our experience in financial services as well as the diversity of our engagement across other industries. We've led implementations of mobile banking at over 40 banks and credit unions across North America, including 8 of the top 25 financial institutions. To date, our solutions have enabled more than 500 million SMS, mobile web, and application-based transactions. We've also had the opportunity to help other large clients craft mobile strategies, identify and prioritize mobile initiatives across lines of business, and manage the complexity of implementations with back-end systems. We've helped our clients envision, plan for, implement, and launch solutions for customer engagement and commerce, field service, mobile supply chain, and business process enablement. So, with that, let's talk about mobile banking adoption and customer engagement. Adoption rates amongst bank customers has grown extremely quickly, passing that of online banking adoption, which on average has remained relatively flat at about 40% across the industry. Despite online banking appearing to have reached its ceiling, mobile adoption growth is showing no signs of slowing down, with Forrester predicting the number of mobile bankers will double over the next 5 years, reaching 108 million customers by 2017. That represents just under half of all U.S. account holders. What we are seeing is that customers who have never used the online channel are showing an interest in mobile banking, and even those who have used online banking previously are showing a preference for mobile as well. In fact, 1 in 10 mobile bankers are reporting today that they are using the mobile channel as a primary banking touch point. Clearly, this mobile banking thing is more than a passing trend, but let's look at why it's something we need to continue to invest in. Why is it so important to care about driving increased adoption and customer engagement via mobile? Because customers care, and it impacts their behavior, which means it can also impact the bank's bottom line. We know that increased engagement by customers will increase the loyalty to a bank, which means less churn. A recent Gallup survey revealed that only 3.8% of fully engaged customers closed their accounts, as opposed to an average of 6% switching rate for all customers. This translates to a 37% increase in customer retention. Moreover, we know that 7 in 10 mobile banking customers are very or somewhat likely to switch banks in order to get access to the mobile banking features they desire. Therefore, it's not just about keeping customers you have today, but a differentiated mobile offering can actually drive new customer acquisition as well. Also, mobile provides financial institutions with the opportunity to do more with those customer relationships. Increased engagement provides an opportunity for cross-selling or upselling to your customers and can increase the value of each customer relationship. And finally, by increasing mobile adoption, financial institutions will see as much as a 50% reduction in both VRU and live agent calls, which means lower total support costs for those customers. All of these points hopefully demonstrate that by driving more mobile adoption, we can grow our customer base and make the customer relationships more profitable. So, that's great, But how do we go about increasing adoption? Well, we know from a recent Federal Reserve Board study that the primary reason mobile banking customers are not adopting more broadly is they don't feel the current offerings are able to meet their needs. In other words, the mobile banking capabilities that these customers' institutions are providing are either not implemented effectively or the capabilities the customers really need are not included in today's offerings. So, let's look at how financial institutions can make sure they are meeting and exceeding those customer needs, both in terms of current capabilities and opportunities to go above and beyond. It is important to understand it's about more than just mobile, and the capabilities we're talking about can't exist in a vacuum. It's imperative you provide a holistic customer experience across all touchpoints. Your customers should be able to interact with you where and how they want to. A customer should be able to begin a transaction on one channel and continue that conversation seamlessly on another. For example, if you're going to send a customer a low balance alert, you need to make sure the call center and even the tellers are prepared to speak to the events that triggered that notification. If a customer schedules a payment via online banking, they need to be able to see the pending payment via the mobile application, ATM, IVR, and so forth. This requires complex integration between systems, and is why almost all of the mobile implementation projects I've seen end up also being middleware transformation efforts. Business rules and logic for account sorting and grouping should be included in the middleware as opposed to previous customer touchpoints. This will allow them to be presented in the same fashion regardless of customer interface. This investment will not only improve your customer experience, it will also reduce the total cost of ownership across these various systems. Now, let's talk about some basic mobile banking functionality. The 7 capabilities listed here are common throughout most mobile banking applications in the market today and should be considered table stakes for any new initiative. That being said, not all implementations are created equal, and some institutions have provided these capabilities through a better experience. Let's review a few of these capabilities and talk about some of the tricks for making your implementation of these features stand out, as well as some things which you may want to avoid. The first is the ability to locate an ATM or branch, and this should, at a minimum, allow users to find locations based on an address or zip code they enter in, and when available, should also leverage the phone's GPS coordinates to identify nearby locations. Resulting locations should include as much information as possible, including services offered at that location, hours available, and ADA accessibility. Moreover, when providing the location's address, you will want to either provide a link into the phone's built-in map or navigation software, or alternatively, allow users to access a static map image and provide directions to that location. A more recent extension of this functionality, offered by PNC Bank and others, gives users the option to use augmented reality to make use of the phone's camera, GPS, and compass in order to simulate a heads-up display with distance and heading information provided for nearby locations. This functionality is fun, albeit a bit gimmicky for my taste, but unfortunately, the way PNC provides this capability is through a distinct application from the mobile banking offering. Customers do not want to have multiple applications from a single provider on their phone, and the reaction to this can be quite negative, as even Facebook recently discovered and rolled back their separate offerings. You should make sure that your mobile banking application is extensible and integrate any new features into that core application. Next up is checking an account balance. And given this is the most commonly accessed mobile banking function, it's important to get this one right. Keep in mind the perspective of your customers when designing this function, and when and where they are most likely to be accessing this capability. Many times, customers will be standing in line at a store or at a point of sale deciding if they have sufficient funds in their account before making a debit card purchase. They simply want to know how much money is in their primary account and aren't concerned with, at that time at least, with all the other advanced functionality you may be offering to them. Perhaps this is why SMS usage of this particular function is so high relative to the other channels. It's a lot simpler for me to send a BAL SMS command to your shortcode and get an immediate response than it is to launch your application, log in, perhaps answer any security challenge questions you may decide to ask me, then navigate to my account list, and finally click through to the specific account I'm interested in. Given consumers' interest in immediate access, some banks are starting to make primary account balance information accessible as a non-authenticated capability within their apps as well. When we weigh the risk of providing this personally identifiable information, non-personally identifiable information, versus the convenience to customers, we can't help but encourage more institutions to take this approach. Other capabilities which your mobile banking solution should absolutely provide include transaction history, the ability to transfer money between a customer's own accounts, bill payment, alerting, and remote check deposit. While some banks and credit unions are choosing to defer some of these functions to later releases, consumers are proving to be impatient. And it's hard to blame them when the vast majority of competing banks are already meeting these needs. Aside from the table stakes, I want to spend a few minutes talking about emerging trends and other methods for differentiating your mobile banking offerings, which may help you to exceed your customers' expectations. These include enhancing customer alerts, allowing for peer-to-peer payments, supporting customer self-service through transaction inquiry, mobile wallet capabilities, including merchant payments, loyalty cards, and coupons, the use of augmented reality, such as the ATM Finder example we discussed previously, gamification of banking, and ATM interactions, allowing customers to begin a transaction on the phone and receive cash from an ATM without using their card. For today's webinar, I'm going to go into some detail on the first two of these items, and then invite our partner, Personetics, to talk to you about their solution for supporting the third bullet, customer self-service. Let's talk about alerting and how to make your outbound messaging more engaging to your customers. Alerts represent one of the biggest missed opportunities which we're seeing in the market today. All of the other capabilities we're talking about here are initiated by the consumer, but alerts represent the customer giving us their permission, actually requesting that we proactively engage them in a conversation via SMS. This represents a huge opportunity, as 97% of text messages are opened by their recipient, as opposed to only 16 to 17% for email. So, how do we make the most of this access the customer has granted us? Of course, we have to start by making sure we provide the customer's requested information. But in that same message, we may also be able to provide other contextually relevant information. This is a chance to cross-sell our customers by possibly offering things like overdraft protection along with a low balance alert, or perhaps introducing a loan product. We're already leveraging complex event determination engines to trigger the alerts, and that engine has access to a wealth of information about your customer and their banking behavior. So, let's leverage that data to target offers that will be of interest to your customer. As with any permission-based marketing, you want to be prudent and not overstep the bounds of the customer's invitation. In addition to that, consider leveraging alerts that are conversational in nature, allowing customers to respond and transact, either in-band or through other channels. For example, consider empowering your customers in the fight against fraud. When a suspicious card activity is identified, you can send the alert to a customer, including the date, amount, and location of the transaction, and then ask them if they made that purchase. If they didn't, and the transaction is in fact fraudulent, we'll put them in an outbound call queue and notify the customer, and a call center representative will contact them to resolve the issue. However, if the customer does indeed validate the transaction, you can simply close the fraud case. Compare that to the experience of calling a customer at their home number or emailing them while they are traveling. Those attempts to contact the customer fail, and you end up locking the credit card while they are traveling. Anyone who has had this happen to them, particularly while traveling overseas, know how infuriating it can be to have your card deactivated inadvertently, and how damaging that can be to the relationship with the offending bank. Another opportunity for more engaging alerts can be found in bill payments. If we leverage the alerts to remind the customer that a bill is due in X days, we can also provide them with the ability to pay that bill as a direct response to the alert. If they choose not to, let's remind them again, just a couple days before the bill is due. In the second case, we may still offer them the ability to pay the bill in response, but at this time, we'll do it for an expedited handling fee. This fee is likely to be cheaper for the customer than a late payment fee, and also provides a revenue generation opportunity for the bank. Next, let's look at person-to-person payments. As you can see from the image on the right, or the ad you may have seen on TV, Chase has already begun to market this capability. And if remote check deposit serves as any indication, once Chase begins marketing a capability, it's likely to go mainstream very quickly and become an expected capability by customers. So, we need to provide the ability to pay each other quickly and seamlessly. This, of course, needs to be balanced against security concerns, both real and perceived threats, which can undermine customer adoption. In implementing P2P, you should look to utilize technology such as Bluetooth or NFC to facilitate tap-to-pay type functionality or other familiar payment paradigms. The intent is to make P2P payments as natural and interaction as exchanging cash, swiping a credit card, or writing a check. Finally, the successful implementations of P2P will be those that provide an open system and encourage widespread adoption. The recipient of my P2P payment needs to be anyone who I happen to be having dinner with or who provides me a service, not just other members of my financial institution or members of other banks who happen to utilize the same technology. Remember Metcalfe's law, which demonstrates that the value of additional customers who utilize the system, that with each additional customer who utilizes the system, the value of the system to all users will increase exponentially. While Pervasive is happy to help you understand how you can leverage these and some of the other differentiators we talked about, I want to leave the rest of the time to talk about customer self-service and how our partner, Personetics, can enable this capability through their unique tool set. To tell you more about their product and how it can help differentiate your mobile banking experience, I'm pleased to introduce Ido Ofer, who is responsible for bringing Personetics products to market. Mr. Ofer oversees a team of subject matter experts and product managers, crafting a roadmap for Personetics, technology, and business solutions.
Thank you, Brian. Good afternoon, everyone. Thank you for joining us today. For those of you not familiar with us, we were founded in 2010 and are backed by Sequoia Capital and Carmel Ventures. Our headquarters are in New York and our R&D facilities are in Tel Aviv. Our leadership team has been working together for years and has deep roots in the banking industry with expertise in global financial services, risk and compliance, customer service, and real-time analytics. And as you can see here, we were recently named Bank Technology News Mobile Solution Provider of the Year. We've built our solution specifically for the banking industry. And we've done the heavy lifting for you and built a solutions library that has thousands of banking-specific responses that address the majority of questions and issues out there so your customers can resolve their issues quickly. Personetics Digital Banker is a virtual personal assistant that predicts the customer needs and approaches them with relevant solutions. Without this library and heavy lifting, your team would need to spend thousands of hours creating every possible issues and resolution. I realize today's focus is on the mobile channel, but Digital Banker is also optimized for other self-service channels. As you can expect, tablet and web are still predominant channels, and a consistent experience across those channels is vital to self-service. We also want your customer's experience to be relevant and personal, enjoyable, fast, and responsive. Digital Banker lets customers interact in the most natural way, supporting talk, type, and tap, allowing the customer to choose at each point of the conversation what is the most natural way to respond. We want to empower them to resolve their own issues in the most favorable ways. Studies have shown that with immediate problem resolution at their fingertip, consumers gravitate to self-service options. So how do we do all of this? We leverage readily available bank data, like the context of interaction and transactions, recent transaction of the customer, along with Personetics crowd data, meshed together to predict the customer intent. We use sophisticated analytics engine to predict what is the customer reason for inquiry. In fact, some of our recent customer stats show that Digital Banker provides accurate predictions more than 90% of the time, eliminating customer needs to express their concern in most interaction, and then reverting back to speak or type in those few cases. Think about it. That's a huge number of calls that don't make it to the call center, and a huge number of customers who are happy because their issue was resolved in the most natural way. Let's see the solution in action. The benefits of the predictive virtual assistants are an intelligent response at the moment of truth, when the customer may be most agitated, predicting their needs, diffusing the situation, and providing a fast issue resolution without any hold or wait time. We augment that with a flexible customer input, allowing the customer to interact in the way that is most natural in every step of the conversation, when it is natural to talk, when it is natural to type, and leveraging the tap ability of the mobile when that is the most natural response. And that predictive virtual assistant is then delivered consistent across the different channels, providing confidence. This also gives the customer the ability to continue an automated assistance conversation from one channel to another. And finally, we provide seamless transition to a live agent should the need arises, eliminating the customer need to repeat themselves. These benefits make the predictive assistance a compelling service for the consumer. From the institution's perspective, predicting customer issues and providing resolutions out of thousands of different responses has clear benefits as well. It reduces the call into the call center, actual call deflection. And when calls do get into the call center, it reduces the handle time by handling the first part of the conversation in complicated topics such as fraud, and reducing the cost per interaction. The overall benefit is a reduction in operational cost and an increase in user adoption of products and services through timely, smart recommendation. This also increased the share of wallet, leveraging cross-selling and upselling at the right moment during a conversation immediately after providing customer and assistance. The solution Personetics provide is also scalable and a single solution for all channels. A few anecdotes about the solution. We've seen more than 25% of users have opted to try the predictive virtual assistants by providing assistance in a context, on a transaction, on a payment. More than 25% of users each month choose to use that solution. And of those using the solution, a third looked at transactional issues, actually eliminating the need to call into a call center. Another 10% looked at personal spending trends, and a vast majority of the issues were resolved by themselves. Of those customers that had serious complaints, insisting on complicated issues, less than 5% requested a transfer to a live agent, and the rest were resolved automatically. And another interesting anecdote. Once the customer main issue has been resolved, their receptiveness to bank messages increased, and 50% agreed to accept smart recommendations such as joining new banking services, electronic bill, paperless statement, etc. To summarize, the value of predictive assistance is enhancing the customer experience, anticipating their need and providing them an actual issue resolution, reduces cost, and provide a consistent cross-channel response. Personetics' pre-built library of thousands of responses and banking knowledge allows for simple deployment, leveraging industry databases and out-of-the-box topics and processes. I'd like to thank you again for taking the time and hand it over to Brian to wrap up the conversation.
Thanks, Ido. Hopefully we've got a chance to better understand how the Personetics solution, as well as some of the other topics I touched on today, can help differentiate your mobile offerings. Apologize for the issues with the demonstration, but I think you got a chance to at least see how Personetics makes customer self-service a lot easier in practice. And Ido talked to the benefits of that. At this time, we're going to open the conference bridge to questions. To ask a question, please use the raise your hand capability in the webinar control panel. Or if you have issues with that, simply type your message into comments and or the chat, and we'll try and respond to it from there. Okay, I do have one question that came in via email. I'm going to pull that up here real quick. The question for Ido is how do customers interact with the solution relative to the online banking application of the institution?
Yes, so today's conversation was focused on the mobile interaction, where a predictive assistant is significantly important. However, also in the online web-based channel, the predictive assistant is extremely valuable. On the online channel, the customer has a wide screen, so a lot of simple information is already presented, and it is less likely that the customer would use a virtual assistant to ask simple questions like, what's my balance, or things similar to that. What we've seen customers actually use Personetics in the context of an online experience is dealing with the more banking-specific issues that are transactional, i.e., clicking on a charge that they're not sure about, or a charge that looks like it is a double, or any other thing that they are concerned, such as a fee, and asking why did this happen, please explain how can this be avoided in the future, and getting those personalized responses is a more typical use case for the online channel.
Great. Our next question comes from Jay on the webinar. He says, how heavy is the implementation effort for a virtual assistant across all digital touchpoints, and what kind of team is required to effectively manage it?
That's a great question. Building the solution from scratch could actually involve a significant effort, and leveraging the library of pre-built responses, thousands of them already identified, eliminates much of the heavy lifting of implementing a solution. Basically, Personetics' approach is to use what we deem readily available banking data, the same data that is currently presented on the screen in the mobile app, and then augment that with Personetics on cloud data in order to provide a response. From a bank perspective, it boils down to providing the same data that is already provided in the app, providing it to the Personetics, and letting Personetics out of the box deal with the rest. Basically, that reduces the implementation to the minimum effort, leveraging industry knowledge.
Great. The next question came from Paul on the webinar about the earlier discussion on apps being able to provide customers the ability to achieve their account balance without authentication, and whether we have any data as to how many FIs have currently implemented this service. Paul, I'll address that. Basically, I don't have any hard statistics as to adoption or rollout of this feature, but it is becoming very popular, particularly internationally. In the U.S., it's primarily handled only through SMS, but it's becoming more popular through other products. I know 2 large banks in Australia recently rolled out this capability. If you want to contact me offline, I can give you some more details into how they went about doing that. The next question comes from Ivan, also online, asks how many times this this solution has been integrated with other banks. So Ido, maybe you can speak to the number of customers that you've previously worked with.
Yes, Personetics solution has been implemented right now in half a dozen institutions. We already have a couple of them out in the field and a few that are in the trial mode experimenting with their employees. So relatively speaking, there is already several million cardholders that have been exposed, and we're looking to expand that significantly over the next several months.
Very good. The next question comes from Samita, asking about customer interactions via the Personetics tool, and whether those interactions are auditable and can be retrieved for later analysis.
Yes, there are 2 mechanisms that are in place. There is an operational mechanism which allows customer service to audit individual conversation, much like tapping into an IVR recording in order to do individual querying. And then we provide an out-of-the-box mining database which aggregates the information for analysis purposes, helping identifying customer trends, emerging issues, and new topics that require additional coverage.
Very good. I don't see any other hands raised here, so if there are any other questions, I'll pause for a moment to give you an opportunity to do so. Okay, at this point we'll wrap up the Q&A session. We're certainly happy to follow up on any unanswered questions offline. Feel free to contact either myself or Ido. But in the meantime, I thank everybody for attending. A replay of the webinar and a copy of the presentation will be available on our website at pervasivepath.com shortly. If you have any questions, please email us at info@pervasivepath.com or call us at 1-800-975-6567. Thank you, and have a great day.